Boom. We're pre-recorded today, ladies and gentlemen. What we're going to be doing is going over, well, first off, our first weekly newsletter is going to be sent out to all the free subscribers. So keep your eye on your inbox, and thank you for signing up for the Arcane Bear newsletter. And after that, we're going to dive into Bitcoin's prices, where we think we're headed. And again, the reason for technical analysis is just mostly to keep your attention and understanding awareness, so you, I guess for lack of a better terminology, because of the book I've been reading, don't get fooled by randomness. So with that in mind, let's dive in. Okay, so back in the private bear den, we had been looking at this kind of repeating pattern. I'm not the only, let's say, analyst to notice this. I actually think it's a really interesting time to reflect on the repetitive cycles that we see in nature. It's one of the reasons why the Fibonacci retracement tool can be so powerful. But what's interesting here is we have a very similar pattern. Here we saw a very sharp sell candle on the 4 hour, and then right afterwards we saw a rather, well, we'll call it an ascending triangle. There's a few different ways you can look at it depending on where you're looking, but there is a nice little ascending triangle that's been taking place right here. Let's grab our lines like this, and then the top part of the triangle here has been emerging around this area here, around 93.80, 93.90. So as we go into the 1 hour here, we look out for the breakout potential, and then the relationships too. So in the previous videos, when we had looked at the weekly chart, we said that there was the potential to go up to around 13,000 from the extension of the cloud itself. Whether or not we have enough buying power to get there, well, we're going to find out over time. So each of these steps along the way to getting to that particular process is important for multiple reasons. Number one, if you're actually interested in educating yourself about what's taking place here, just watching patterns unfold and the likelihood and the probability versus other probabilities becomes extremely engaging, right? So more than just making money here, I usually chart Bitcoin for the educational process. In terms of like flipping back and forth, well, the private bear den gets a great view of that one, but basically we're using, anyways, I don't want to digress too far. We'll save that for the last part of this video. So this ascending triangle, when we scroll out back to the daily, let's compare it and let's use a type of, let's use an example here. So we'll scroll in. We'll grab our Fibonacci tool. Again, we'll stay in this this kind of flow of idea, bring it right to the top and then around to the mid-range of the last area that we exploded through. Actually, I'd go a little bit lower on the bottom than the volume profile is showing. And then look at this. From the top of the previous wave, on our circle here, we see almost a perfect 2618 extension, almost, give or take, right? We could say we could move the bottom around here to the volume profile instead. Like it's flexible, right? Anywhere in that range is actually pretty close in my mind. So the fact that we're up at the 2618 of the first break of the wave's extension is actually let's look at it this way, right? Let's use our example here. We see a 61% movement. Well, at least let's go to the previous wave, 50% to the top of this wave before it dropped down, and then you could look at it in multiple variations, right? We actually had a wave here at around 43% and another wave here. So there's a few different ways you can count this. Now I'm going to clean this chart up so it doesn't look so covered in color and just use the same extension. So here we have 20%, which is around 11,000. So at the first part, to break into 10,000 is actually quite easy for this. Now we want to then compare it with Elliott waves after, and then look at the weekly chart so we can see where the cloud is. So 30% is around 12,000 up, and 13,000 is around 40% up. So if we had a similar characteristic of this wave, now if we want, I think what's fun to do is grab our Elliott impulse and say, okay, let's try to figure out where the Elliott waves are here. This could have been a 1, so this could have been a 1, a 2, a 3, a 4, and we could be into the 5s. Or, and this is one of the things about Elliott, is it's kind of open to interpretation because it's based off fractal mathematics. And fractal mathematics, if you've ever looked at a fractal, how it zooms in and out, it's very characteristically kind of up to you what you see, I guess. So this could be a 1, a 2, a 3, a 4, and then we could see the extension of the 5. Now, when we go out to the weekly chart, this is where we can see the extension of the cloud. We've actually, if we look where we've placed the 5, it's right around the extension of the cloud. And the cloud breaks here at 10,200. So this would be a very important part. If we break outside of the cloud after that, whew, this thing could, it could be a very, very interesting show to watch. Now, if it doesn't, so, I mean, this is the thing about technical analysis too. You always have to look at the probabilities for downside, not just upside. I think that's one of the things that people get confused in risk analysis. You always have to adjust for downside risk potential, ladies and gentlemen. Yes, that makes sense, right? Not financial advice. So this looks like an ascending triangle to me. This is actually a fairly bullish indicator. The fact that we have it somewhat repeated here on multiple time frames, which is a lot easier to see on the 4-hour. The relationship between these two, again, sharp sell-off, and then a peak back above the bear claw, and almost a touch here on that sell-off of the 200 exponential, or sorry, slow moving average here as well. So we have multiple similarities in this pattern, and this is another type of what we call fractal pattern recognition, which means we're looking for a pattern that fits inside of the pattern that we had seen previously. Not so dissimilar to Elliott wave, but Elliott wave is more showing the fluctuation of emotions based over time and the speculative rises and peaks that you see on the last two variations of most people's emotions. Anyways, so I think Bitcoin's going to go probably to around 10,000 on the next one and break outside of this little circle that we have here. Again, this is more fractal pattern recognition than it is, the ascending triangle that we're looking at. Although that ascending triangle is also the one that pointed us back into the previous wave. Be like, oh, hey, look how similar this looks. I think what we'll try to do in the next video is go a bit over some of the history and line up Bitcoin's history over some of the moves that we see today to compare the changes. Because as we move forward in every ecosystem, you start to see a kind of a fluctuation of the way our original technical patterns would have worked in the stock market. Again, so the other interesting thing I want to look at today was gold and seller. So someone made a comment about my video saying gold could go to $600. And again, all I was doing was looking at downside potential versus Bitcoin at that point. I said I thought Bitcoin was a better investment, at least for gold to break out. Although look at this. For those of you, again, that are in the private bear member, here's a pattern that I didn't recognize quite as frequently as I do now, which is actually an ascending triangle at the recovery phase. Now, normally ascending triangles in the previous market years at the bottom of at the exit of a bear market could have actually meant further downside, that it was a continuation of a downtrend unto itself. So the fact that this ascending triangle has taken place and just broken above it is actually looking great for gold. Now, I'm not a big gold fan. I do still have some. I still have some silver too, which brings us over to the silver conversation as well. I believe that's very similar holding pattern. But let's take a look at seller. I don't want to touch into gold too much because it's. I mean, here just for instance, let's take a look. We're at 1.6. Let's go from the bottom of the candle here. 7% in gold in the last 56 days. That's not all that entertaining to me. That's kind of like an old man. I'm not interested in that. That's way too long of a time frame for way too small of a gain. But let's take seller and fetch and kind of show you guys. I'm gonna basically go over my part of my thesis here as a rough sketch because we're working on the private newsletter. So this pattern in previous times. At least I don't have over a decade of experience in the previous markets, and I'm thankful for that. This ascending triangle during a bear market before generally meant it was going to break down again. But in these new markets, these have actually proven to be very explosive moves. So what I'm trying to show here is actually the similarity right now between gold's price and the chart that we were just looking at, which has an ascending triangle coming off a lot of downwards market momentum, right? So here, let's ignore the fact that seller has very little history, but just take into account this main line here and this VPN line that we see drawn here as well. Did I draw that? No, that's just the VPR itself. Let's change the settings. For those of you that are wondering what I'm using over here, this is called the volume profile. It generally, I think it's only part of Pro, but it's a really nice tool to show you where there's most of the volume building. So currently with Seller, we see on the 4-hour chart that most of the volume has actually been building here between 186 and 223. So this has been a very important area, and with the higher lows each time, this is looking very bullish. Now, again, compared to gold, we see this ascending triangle, but for gold, it took significantly longer, right? So in the crypto space, we've actually seen almost an accelerated format of playtime, right? Which is great, and it makes sense because you have significantly longer market days as well as no market weekends. So here you have 142 days, 1,421 days, give or take, right, on either side of the downtrend. Let's just say 1,600 days for a rough example. To see from the bottom of the candle here to the top of the triangle was 28%. And again, let's remove any likelihood of what these things are as underlying fundamental values, because it doesn't really matter in some of these short-term theses. All we're looking at is a buildup of speculation, because regardless of what the underlying asset is, the speculation remains the same. We have a great example of where Jeff Bezos is talking about the growth of Amazon and its decline in stock price. That at that time they had just fallen from $100 down to $6, but it was the most growth that their company was seeing. So in the background, they had more orders, they had more new clients, they had more new signups every month. And what's important about that is to realize that the speculative value dropped by 96%, while the actual value of the company was growing in the background. And that's important for, I think, a few big reasons, but one of those big reasons is obviously that when we're looking at charts in short form analogies, we're focusing on the speculative understanding, not the fundamentals. Long-term investing should always be done from a fundamental standpoint, because if you can't sit in it long-term and know that Amazon, even though the stock price, the speculative value was down massively, that the fundamentals were just screaming. And again, that's the importance here, is understanding fundamentals versus speculative analysis, right? Because they're very, very important factors to keep in your toolkit. So here, to compare with gold, from the bottom to the top here, this is 160% on a 10-day period. Not 16 and over the overall 34 days for 134%. So anyone that's interested in speculative asset like conjecture, this space is just exciting, and you see the same explosive move set up. Now that we're seeing a move that I've become more I guess in tune with, again, because I mean a lot of anything is just time on deck. How many years have you been in and out of a trade or holding investments? You know, okay, well, my first investments were in 2014 and 15 in some CBD and hemp oil companies. I also took out some really out of the market money options and puts. And then I changed my thesis, realizing the stock market was going to go up. I put all my gold and silver into Bitcoin at that. Well, Bitcoin is around $600 again. And then I changed. And then the whole thesis of investing became learning speculative versus fundamental analysis, because they're very, very different things. And in speculative, you're a hell of a lot more likely to get fooled by the random things that are taking place. But here, these repetitive market cycles. So I'm going to keep this video kind of short. We'll just go in for another 2 minutes. And I want to show you Fetch. Because Fetch, in my mind, has this same characteristic starting to form. Where we see, let's grab this tool. We'll pull this back up here. The triangle's extension is coming out all the way over here. We're actually seeing the bottom can be built. The bottom can build and change. The more important part here, from what I can tell, is finding the history of the asset, and then also looking at the volume profile fill. The other extremely important thing to note is that if ever Bitcoin starts to look like it's becoming bullish, I close out positions either in slight profit or slight loss, because Bitcoin and these two things are interacting. It's a perfect example of what happens with Litecoin, is that there's a long-term relationship with Litecoin and Bitcoin, where Litecoin has never broken above, or at least not in the last few years, this previous high. The first time it had these massive speculative highs against Bitcoin was around 0.05 or 50,000 Satoshis. Since then, since 2015, we have a consistent retest of the 8,000 Satoshi mark, and then a retest of the 20,000, retest of the 8,000, retest of the 20,000-ish, right? This is the first time we haven't gone, and here you actually see a not so dissimilar pattern. You actually see almost a triangle starting to form right here as well. So these, I think a lot of tokens are going to start looking very bullish as people realize that this entire space is a whole new entity onto its own, right? It's not about Bitcoin maximalism anymore. It's about this entire ecosystem. And that's why I think, you know, LibraCoin has some, a very unique interest into the space, just because it brings more adoption and understanding and more likelihood that people fall down the rabbit hole of Bitcoin, trying to be like, oh, what's a cryptocurrency? And then be like, oh, wait, you mean Bitcoin, right? Anyways, the point of this is I wanted to point out these particular holding patterns, and gold has it too. So yes, even though gold had the downside to go lower versus the rising stock market prices, this new pattern that we've seen forming in many other assets is looking very bullish to me. And at the same time, again, remember that we're always competing with Bitcoin because Bitcoin's our unit of our count. It's our money. If I'm going to trade and make an analysis on a speculative idea, at least, which is significantly more shorter term than an investment analysis, then things like Seller have a very, very unique opportunity, as long as I know that I have to risk adjust and play that game. Because here, if you're not playing with stop losses, you could get, as the traders of nowadays seem to say, wrecked, or as Nassim Taleb calls, ruined. Whether you want to get ruined or wrecked, there is danger in speculative plays because there might not be fundamental analysis. Although there is, if you go to binanceresearch.info.com or whatever like this, you can do a little bit more of the research on what Seller Network is, because they do have some fundamentals, and this is another reason why we're playing this card. Anyways, let's do the Arcane Bear. If you don't like our content and think we do a horrible job, remember to give us a thumbs down. If you appreciate what we do and you're new here potentially, give us those thumbs up. Remember to subscribe. Most importantly, apparently, YouTube uses the sharing algorithm as the top one. So if you can, take this video, put it onto your Twitter, onto your Reddit, onto your Instagram, well, that doesn't really count, your Facebook, or any of the other social media feeds, and help us share this content. I think more than a like or a subscribe nowadays, YouTube is really deriving a lot of its data off the share. So let's try that out, see how much sharing we can do. I really appreciate all your guys' support, to all the Bear family members, and to the admins who have worked tirelessly to create such a great community space, as well as the weekly newsletters that will be coming out. And I think we'll maybe even do like a top 5 performers once a month too. Keep your eyes on your inboxes. Thank you for subscribing. And if you're interested, there's the private Bear Den member as well. Thank you for all the support. I love trading in the background and speculating with you guys. Remember, none of this is financial advice. See you guys on the other side. And just with one last time, I'll give you my face and go like this. Blah.